Good afternoon. It's my pleasure to be here today. Let me start by saying a little bit about myself. I was with Citi for 27 years, most recently in the role of a CIO for international markets for the consumer business. And for the last 6 months, I have been an entrepreneur, serial entrepreneur, working on getting the power of open architecture to the financial institutions. So I'm here with my august audience, panelists, and let me quickly ask them to talk about themselves. So let me first ask you, Matthias, CEO of Fidor.
Well, hi everybody. Thank you for having us. That's a big honor. Well, Fidor Bank actually is most frequently called the oldest fintech bank of the world, which I actually like very much as a phrase, as this somehow is a contradiction in terms. So on the one side, we are a bank, very customer-centric. We are one of the very few banks operating with a community. We have a digital account infrastructure and a marketplace, which is open for third-party offers. On the other side, we have a Fidor Solutions technology company, which is distributing our infrastructure for other banks or for non-banks who want to offer financial services to their customer base.
Excellent. Let me now introduce to you Mr. Brian Behlendorf. Brian?
Sure. I'm Executive Director of Hyperledger. Hyperledger is a blockchain technology open source project. We're part of the Linux Foundation. We're actually a consortium of over 180 different companies and organizations working together to build underlying software, underlying tools for building distributed ledgers and smart contract systems. You could think of it kind of like an open standards kind of play, except instead of creating documents, we create code that you can then build on top of.
Very good. And Michael Tang, Global Financial Services Transformation Lead for Digital from Deloitte. Michael?
Thank you very much. We have the privilege of listening, sharing, and advising many of our global clients around digital transformation. I would say we don't always come with the answer, but we're very comfortable and confident co-designing and co-creating the digital transformation journey with our clients. Excellent.
And last but not the least, James Lloyd, Asia lead for EY.
Certainly not least, DK. James Lloyd, Asia Pacific, FinTech leader at EY, based in Hong Kong, but with a regional remit. And really what we're about, myself coming from a startup FinTech background, we're about identifying early stage, growth stage, non-traditional financial services players that we can support, either in partnership with our existing clients, big banks, insurers, and so on, or equally for some of our investee clients as they seek to invest in, partner in some of these businesses.
Excellent. So once again, thank you to everybody for coming here. The topic today is open architecture, moving from mindset to skill set. Now before we dive deep into it, let me ask you, James, there's a lot of definitional clarity that needs to be there. Open architecture, open APIs, open source, banking APIs. Can you just, for the audience, clarify what your perspective is on these definitions?
Well, certainly as it pertains to, I'm a bit of a pedant on this topic. Open banking for me is a regulatory mandate which actually, as of now, effectively exists in the UK and to some degree in Europe, wherein retail banks are being mandated to standardize and open up certain APIs to third-party providers. The reason I use that distinction is it's at the behest of the customers whether they want their banks to open up APIs to third parties. It's not for the banks to decide. The regulators will whitelist certain providers, and then customers will have ownership over their own data, if you like. I distinguish that open banking, very specific regulatory mandate from the more general concept of open APIs, wherein banks and other financial institutions are increasingly leveraging effectively an API architecture, which often internally, and then externalizing some of those APIs for consumption by third parties. But in this instance, it's the financial institution themselves who are determining who they should be opening it up to, and not the end customer.
So I think one would think that from the topic that moving from mindset to skill set, that it is generally an accepted thing that the OPI journey is here to stay, and API dominated landscape is the one to go for. And let's debate this a little bit, and let me ask Michael. Michael, what's your view? Is that something that is already accepted, given, or what are the choices in front of banks, right? Are they being pushed to it, or they are kind of doing it themselves? What's your perspective?
I think it's a much broader way to look at it. To James's point, particularly the EU, the UK, you have this notion of PSD2 where it's legislatively mandated. I would view that as a burning platform. You need to do that. And there's certain strategies and focus areas, whether you have the mandatory open APIs, or do you take advantage of that activity and actually create some premium APIs? But I know the rest of the world, particularly Australia and Canada, are closely watching to the behaviors of what's happening in the EU with PSD2, which I would say that activity around open APIs, open architecture, open banking is more going to be a burning desire, a burning ambition, and what are they going to do strategically? And ultimately, whether it's generally accepted or not, it's going to end up being a business decision. And we could start unpacking the different business models or the strategic choices that these banks actually need to make. But I do agree that open APIs and open banking is absolutely going to be a catalyst to a game changer in terms of what these banks are going to be going to market with.
Excellent. So Matthias, for someone who is, you said you are the first FinTech to
I said we're the oldest FinTech bank.
Oldest FinTech.
Which means we're the first.
But that means
right,
you're first,
right.
though, right?
Absolutely, absolutely. You're right.
So let me shift gears a little bit, and you guys and Fidor have built the platform that enables, let's say, a bank to get to this journey faster and enable an adoption of a model that helps bring about an environment of open API. Tell us a little bit about open architecture. Tell us a little bit about the architecture itself. How have you sort of defined it? Tell the audience about how is it all laid out.
Okay, so I actually like the title of this session very much, from mindset to come to tech set and so on. Because I think, first of all, we still have to talk about the mindset maybe a little bit, because technically I think it's not that rocket science, is it? It's more like, you have to tell us, it's more like simplifying things technically. The huge complexity is in the mindset. So do we want this? First of all, what is it good for? This is a second question, by the way, we should not forget. How do we create, third question, how do we create a customer user journey out of it? What is it good for our customers, by the way? What can we achieve with doing so? And so on and so forth. So this is the one side of the mindset. The other side of the mindset is actually, we had, I remember a conference, I had the honor to be on stage as well about open banking and API back in Copenhagen the other day. And for 30 minutes, the bankers, I have to say, sorry guys, the bankers with me were discussing the risk of it. So after 30 minutes, they've been scared to death about APIs. This is the end of the financial system. So we had to discuss about the opportunities again and bring it back into a more positive perspective for the future. So mindset, don't forget about the mindset. I think that all these tech discussions we have here today and the days of the Singapore FinTech Festival are in particular a cultural discussion, first of all. So this is a little bit detour. I know this is not answering your question, but I'm a specialist in not answering the question.
I'll force you to answer it in short.
No, and I come back to this, joking aside. And by the way, I'm the only German with humor. Yeah? See? So, what is the technical infrastructure? We come to the boring part now. So we created, once we founded Fidor Bank, actually we realized that nothing like an infrastructure is existing that we would need to fulfill our customer-centric attitude and experience with the customer. So we created a community, we came to loyalty scheme, we created this account infrastructure and so on. We, at a certain point, found out that around us there's a lot of fintech developments happening, like crowd finance came up, peer-to-peer lending, you haven't seen it. So at a certain point we surrendered. We came to our API strategy by surrendering to this whole process, because we realized if we want to cope with that development, we need to open up the platform, otherwise we will not make it. We cannot come to a point that we only proprietarily create the solutions for our customers. We need to integrate third party. That was the moment our mindset made click actually, and we opened up the platform. We then came to the point that our strategy is, and this we defined 4 years ago, we said API first, app second. I think the whole industry did walk exactly the other route, saying app first, no idea about the API second, So I think now it pays off. Now we have the API layer, We have on top of an API layer, we have the user experience layer, which can be created by, for instance, our institutional customers like O2 Telefonica. And via the APIs, they can approach our infrastructure, and we have a shared infrastructure game there. So they can use our banking stack, actually, which is the middleware, which is Fidor operating systems. There we have the processes, the end-to-end digital high-speed banking processes on the one end, but also containing the data lake. And underneath that, if you want to say it like that, we have the core banking environment, which we do not want to touch. I know there are many people around, they want to exactly push you into this direction, but this is Pandora's can, so to say. So we do not want to touch that. We want to remain it stable, talk to the regulator and so on. That's it. High-speed digital banking in the middle layer, API ring fenced into each direction, and user experience on top.
Very interesting. We'll come back to that in a bit.
Can I just jump in on the mindset bit? Because I think, certainly I agree. I mean, I think the distinction I made at the start between an environment that is regulatory driven, really from a competition mandate. If you take the UK example, the Competition and Markets Authority are the ones implementing open banking. This is clearly a competition driven change for the existing incumbents. So what's interesting, and perhaps by way of context, our EY's global EMEA lead is actually implementation trustee on behalf of the UK government. So in fact, he's been leading the implementation, which will go live in Q1 of next year. But what's interesting, just by way of some of the insights coming out of that initiative, in fact, I think it's true that conceptually, technically, it's kind of relatively straightforward, but to take legacy systems and legacy banks and kind of, overlay a kind of an API layer on top of that is non-trivial, and it's been interesting to see which of the banks are kind of better positioned in that. It's not often who you expect. But then secondly, on the point of mindset, it's also been interesting, and I won't say who specifically, but it's been interesting that some of the heads of some of the banks in the UK who have been, I would say, kind of, dispositionally opposed to, of course, opening up some of their transaction data, opening up some of payment initiation functions to third parties. So there's been a bit of opposition at the top layer, but in fact, a lot of the folks who are the actual technical engineers, a lot of the people implementing it, are very excited by this. As a technical initiative, as a technical challenge, it's really quite thrilling. It opens up a whole new environment, not only of competition for existing banks, but also for an opportunity for those existing banks to themselves compete at a new level by perhaps aggregating services, by building out a platform wherein they offer both first-party, third-party services, et cetera, et cetera. So it is absolutely a question of mindset, whether you're a small startup, whether you're a big technology player, or whether you're an incumbent bank. It's the manner in which you approach this opportunity is going to define how well you do.
Very good. Let me shift gears a little bit, and I'll keep poking on that skill set question. Coming to you, Brian, now. So you guys at Hyperledger, you are building the plumbing, as you say, to make this, you deliver high quality production ready code that can be used hopefully as an open standard by the banks to sort of support the shared ledger technology. Tell us, what do you do to make this really high quality, and how do people in banks kind of then take that and make sure that the services are made highly available? That skill set is so critical to banks, right?
Well, if we're still talking about mindset, actually, what's funny is the mindset of the business community in the banking sector is only catching up, I think, with the mindset of the developer community, which I think, for as long as I've been in it at least, has always been about who else has solved this problem that I'm solving now, and have they open sourced their code to do it? Can I borrow that? And if I find a bug in it, can I fix the bug and send it upstream to them, right? Can I build something new with other people with the same problem? Right, and fix that and move on. And banks have been using Linux for a long time. They've been using Apache. Arguably, as soon as they connected to the internet, they were using and then feeding back into kind of the underlying technology that built the internet. And so, as the blockchain technology kind of landscape has emerged in the last few years, open source software has been table stakes in this space. Right, every meaningful technology being examined and used by the banking sector in distributed ledgers and smart contracts is at its core open source. Partly that's because that's kind of how engineering and research is done these days. You don't tend to have the deep castles of IP that you used to have, partly because that's where the startups are really enamored. But also I'd say it's because security and trust mean, these are tools to reboot those, right? To come up with ways to trust the system, trust the networks, and not have to proxy that trust into central organizations or into big server farms somewhere. And in order to trust that system, you have to trust the code underneath it. You have to be able to inspect it and challenge it, interrogate it, and improve it, right? So the skill sets to do this are things I think the academic world is still learning how to teach in the computer science field, right? How do you get developers to actually, be able to crawl through an existing body of code and collaborate with other people who've written it? But this is something that we've learned how to do in other sectors, and I think the banking sector is picking this up now. So at the Linux Foundation, we have this 15-year history now of helping build these open source projects, initially the Linux kernel, and then all this cloud computing software, Cloud Foundry, the Cloud Native Compute Foundation. And 2 years ago, we launched Hyperledger, partly as a recognition that in this new landscape, the cryptocurrency stuff was interesting, but what really mattered was this underlying infrastructure technology. And there was a real need to see, can this be applied to banking and settlement? Could it be applied to healthcare records? Could it be applied to identity systems? And we're only going to find that out if we actually take these raw ideas and nudge them towards, or even push them towards, becoming production quality releases, 1.0 releases, right? And you can do that as a small team and hope for the best, but the best way is to get it validated out there. An example of this is what MAS announced yesterday with Project Ubin, where they took Hyperledger Fabric, one of our projects, and they stood it up next to Quorum, which came also from one of our members, JP Morgan, working with the Ethereum community, and stood up next to R3's Corda, which R3 is also a member of our consortium. So even these projects had shared ideas even before they got to a production release. And MAS looked at this when they built Ubin to kind of analyze, could these tools be used for real-time gross settlement systems? How do they differ when they do that? None of this would have really been possible in quite the same way, at least, had these been proprietary stacks, had this been, a competition between sales teams rather than a competition between technologists and a real sober, objective evaluation of these platforms. So that's why I think this mindset, the skill set kind of evolution that's taking place now is essential, certainly, to adopting these new technologies, but it's about time.
Good. Let me make the nudge a little bit towards the not so technical questions, and let me go to Michael, right? And I worked in Citi for a long time, and I found that both technology and business questions were both equally relevant to get success in project. So as we look at the organizations, Michael, what's the evolution of the organization from a business point of view that's required to take advantage of the open architecture?
For those of you that were lucky enough to catch Joe Ito's keynote yesterday, he said something I think was brilliant. And I'll paraphrase, where the East Coast is coming up with the foundational movement of technology, it was the West Coast that actually commercialized it. And the last time I checked, many of the banks with shareholders are for-profit companies. So part of that burning desire is, does it actually make sense from a business model before you actually move to the mindset? And when you take a look at my last comment around, I believe open banking and open APIs are going to be a catalyst that are actually going to challenge these banks and organizations to actually transform their business models. They're going to have some pretty strategic choices to make. And there's going to be a handful of archetypes what they're going to make. And it's going to range from something like if they're actually going to be great as a product champion. So they are going to compete by having the best product out there. Or they can compete by being an owner of a particular market segment, whether it's an industry vertical or a sector. They also have choices because of open banking and open API, whether they solely compete on volume, scale, and pricing, where they essentially become a utility for banks. And then the fourth one, which is really, really interesting, that really drives from the open banking and open API movement, is do they start mimicking some of these technology giants as becoming a platform? So they're not only just selling their own manufactured products, that they essentially become a platform through open APIs where they can actually wholesale a lot of these. So open banking and open APIs is really going to fundamentally drive the business strategy of these models that is going to transform, I think, banking. It's going to be a game changer.
Yeah, I mean, so I fully agree. And let me add to that a little bit from an Asia-Pacific perspective, because I think we think of the big Western, and by which I really mean US platforms, Google, Amazon, Facebook, Apple, who have I missed? But in reality, it's actually the big China platforms who have moved perhaps most aggressively laterally into financial services. Of course, the Alipay or Ant Financial ecosystem, the WeChat Pay ecosystem, these are definitional platforms insofar as they offer up both first-party and third-party services. And in fact, most interestingly, they offer financial and non-financial services. They very much are kind of destination applications, destination. So this is interesting for a couple of reasons. A, because just the speed of change and the pace of adoption for a technology company is very different to a traditional financial services player. So, to take one data point, if you see Alipay or Ant Financial's money market fund, which was launched about 4 years ago, accessible through people moving money onto the Alipay app, they can then invest in a money market fund. That's now about $236 billion US dollars assets under management. That's by far the largest money market fund in the world. Didn't exist 4 years ago. The manner in which technology platforms are able to leverage scale and speed, and if they move laterally into financial services, and I'm not saying necessarily the US or Western ones will, there's regulatory and policy considerations around that. But if they decide to move in to certain areas of financial services, certainly they'll be leveraging an open API architecture, if you like, or a platform approach. But the speed at which they can consume markets is tremendous.
Just a quick comment on that. I think part of the velocity of their speed, I believe there's going to be a fundamental shift from building products and services from a bank, and they're going to move to this notion of assembly. Because open APIs is actually nothing new, right? And then you get into, Matthias, what you're talking about. Once you get the platform, they're essentially Lego blocks. And you're going to be able to assemble the onboard customer experience. You're going to be able to assemble KYC AML, which moves to a much more, I'll say, dramatically difference in terms of how you create these services.
Yeah, it's a very modular life you're living. We most recently, developed also our digital loan factory. We are cooperating there with loan comparison websites. We allow by that loan comparison websites to set up their own products, which is a total game changer to the loan comparison website, by the way, because suddenly they're not only comparing and kind of introducing broker to the loan generating bank, they have their own loan. And they can blend it into the search result or into the comparison result. And what is it? It's an API that allows actually to, send their customer data to us. We do the kind of credit score rating, customer rating, and so on. And within seconds, we play back a risk-adjusted pricing to this guy, saying, okay, do you want to have it or not? And if you want to have it now, go for it. Okay, so this is a second game. This is also a game on a Sunday. There's no reason. By the way, if you talk APIs, you talk about the corporate culture also and the working culture, which means you need to operate this on Sundays and on what we call bank holidays.
Yes.
So we should have an API holiday by that.
You need to operate like a technology company.
Yeah,
not a financial service.
Absolutely. So this has an impact on the organizational setup and culture. You have to create suddenly an emergency management for who's watching the API accessibility and so on. So this is a total new thing.
So let me pick on that and ask Brian. So you have all these people assembling capabilities, and these capabilities are delivered to a customer. Now all of a sudden a service doesn't work, right? And it breaks down. And there's a highly collaborative mechanism where this service has now gotten delivered to the end customer. How are we protecting the experience for the customer? And who does he call? How do we sort of figure it out that, whose cell phone is going to ring when something does not work, Brian? How do you sort of handle that?
Well, this is still the responsibility for the end organization, right? I mean, this is still, right, when the back end is comprised of these building blocks, right, there's still an owner for these building blocks. When it's a running service, when there's assets at play, when, there's still organizations and individuals. And you can choose to use free software, right? You can choose to use an open API, but there's still, some obligation on the part of, the provider of that software, the provider of that service, if they're getting paid, if they're receiving value for delivering that as a service, to support that, right, to fix something. And with open source software, and to some degree even with open standards, you have the power as one of these aggregators, as the one presenting the front end to the customer, to be self-sufficient, right, or to choose between a competitive marketplace of providers of these services, right? And when it's open source software underneath, you don't even have to switch technology platforms when you need to switch a vendor, or switch a provider of a service. And so this should make for a much more competitive marketplace, right? It should mean that the power to aggregate into a few small hands for a bank in any given sector or other service provider starts to dissipate. We get a much more agile kind of environment. And I think it opens the question of, will you have the customers be served by, instead of, the Bank of America and a few others, right? With a whole sweep of very tailored, very custom kind of banks who, cherry picking the different services on the back end to meet a certain set of a certain niche of customers. I think it looks more like that.
DK, let me take that question as well in the context of open banking, because I think it's a really interesting one. I just gave an example a moment ago from Alipay and Ant Financial, their own money market fund. But actually on the Ali platform, they also offer a series of third-party funds, investment products, wealth asset management products. And indeed, we have seen a couple of examples of, for example, investment products going bad that have been offered on the Ali platform. And then the response from consumers on the Ali platform has been, hey, what happened to this investment product? Alibaba, you owe me, or Ant Financial, where's the compensation? They say, well, no, we're an intermediary offering third-party services. So there's there are conceptual, technical, and risk considerations in relation to being a platform, and in fact, I think we've seen this in the U.S. as well, with some of the big tech platforms increasingly, having provided white space in which third-party services can be offered, they've begun to shrink some of that white space with their own first-party offerings. And equally, kind of a corresponding example in the UK where we're implementing open banking. Again, just to clarify for the audience, what that means in practice is, as of January next year, fintechs and technology companies that have been whitelisted by the regulator will be able to access, with your permission, will be able to access your transaction data, and indeed will be able to authorize and make payments on your behalf. Now, the difficulty is, if you're Bank A and you don't have the authority to decline these authorizations, it's the customer opening it. The difficulty is, if some of these if some of these third parties, if something untoward happens or there's risk associated with it, it's back to the question, who do you call? Do you call the fintech? Do you call the tech company? Or instinctively, at least in the initial period, do we expect people to call their bank and say, hey, what happened to my money? What happened to my transaction data? So, these are, this is why it's such an interesting field. Frankly, a lot of these questions have yet to be fully answered.
Okay, so I have to shift gears a little bit, because there's the original premise of this was also to continue to hone on the topic of what are the skill sets, right? So Matthias, I saw this transition that from building of projects in large banks to one where we are moving to agile teams. So first we had this whole wave of technology teams that are in-house, right? Then we had this whole outsourcing to India and Philippines and many of the third-party locations. And then we realized that, look, we have to get back to an agile model where we have to sort of build this co-located experiences. And then we have capabilities coming from third parties, Fidor and all, right? So how do we sort of look at the technology groups in banks, right? How do they sort of organize? What do they focus on? How do they bring the best out of this collaborative enterprise in which these capabilities are being served and build them? I think the big banks will be there for a long time, and I agree that they will probably be competing with a lot of players, but I think the big banks have a lot of advantages. How do their technology teams now reconfigure themselves with the right skill set to take advantage of this ecosystem?
Well, I'm definitely the wrong person to ask that, but. Because we are a small bank on the one side, and maybe this is already answering this question, okay? So we are a small bank, first of all, and believe me, I try to remain organizationally as long as possible a small bank. Why? Because, again, for cultural reasons, for efficiency reasons, and so on. On the other side, we created a tech company aside the bank, creating a very special culture. Here we are again on the culture game. A very special culture with the right people, attracting hopefully the right talent and being attractive for them. And allowing them actually to exactly run into this direction. Believe me, once I had the first information about we're gonna go API first, I just say, yeah, well, if you think that makes a lot of sense, but give me an answer to my question, what is an API? So. It is I would say, a trust organization that you really trust in your tech guys that deliver you this kind of expertise and, of course, somehow convince you as the CEO and shareholder that this makes a lot of sense. I think it is also philosophical understanding that openness in a system is strengthening you instead of closing the box. Again, we come to this point. And then I think it is, I'm not too sure. It really depends on whether the bank is owning its tech product itself, which I think might not be the case. A bank normally is a customer to this. Nevertheless, the bank needs to get its hand around it and say, listen, this is our business case as discussed. This is what we want to deliver. This is what we want to offer to our partners and services. This is, by the way, bankers in this room, please, you need to get an understanding of the data model you're operating on, because I think you agree in the API itself is useless if the data model is shit, okay? And I say this at the market guy of our bank, actually. I'm coming to this point now. So I think it needs all of us on the business side to understand more of the tech side. On the tech side, the only thing is what I can really ask for is please understand the business side as well. So we need to kind of crossbreed these cultures, create ownership instead of departments that are kind of, letting the monkey jump from one shoulder to the other, what we experience quite often. Accept that, for instance, agility does mean you cannot have a service supplier or tech supplier that can give you fixed price to a certain time of the year and a fixed quality. This is not agile, but this is contradicting to this. So if you use the phrase of agile and maybe Scrum and so on, you must accept the outcome of it. And you must handle this, what we also could call the VUCA world, that you cannot predict what is coming out. That's about it.
One of the other culture points worth mentioning, I think, is, so I agree. Many banks, for example, still think of technology as the IT department, and kind of never the twain shall meet. So I mean, certainly there's a bunch of mindset and culture issues, but I don't think they're necessarily insurmountable. But what is certainly a key distinction in my mind between big tech companies, including the big Asia guys as well as the US, and traditional financial services players is, the kind of horizon, the time horizon they look at. If you're in a large incumbent financial services institution, your personal incentives to implement transformational change tends to be somewhat limited relative to the kind of quarterly reporting structure. I mean, I don't want to blame everything on the traditional quarterly reporting structure, but literally, people tend to be in roles for a certain period of time. They tend to report at a certain period of time, and so on and so forth. A lot of the big tech players, and for sure they have the capital to give them this kind of flexibility, but a lot of them are perhaps a little bit more medium or long-term minded when it comes to infrastructure, when it comes to investing in people, and processes and so on and so forth. So again, it's not insurmountable, but it goes back to, Jack Ma himself would talk about, it's not really about FinTech, it's about tech fin. I know this is kind of splitting hairs a little bit, but there's a different mindset to be a technology company that moves into financial services is very, very, very different than being a financial services company that increasingly leverages technology.
Maybe one example how it should not be, just a brief one, I promise. We had a conversation with one of the big data centers of the big incumbent, one of the biggest incumbent organizations in German banking, and they explained me that it takes them 6 months to set up the development environment for one API. This is not what we should talk about.
It's not agile. Okay. No, so I think what we're also saying in the last couple of years is an evolution from the idea of buy versus build to recognizing there's actually something in between those 2 points, which is collaborate, right? Certainly you want to buy things that you can treat as a black box, right? No bank wants to be building their own operating system these days, hopefully not, right? And you want to build the things that are highly distinctive about your business, the things that are core IP, that are the key to your differentiator. But between those two is actually, people are realizing a larger and larger body of IP, of software IP that represents something you really should be working with the leading edge edge of the other players in your industry on. Blockchain technology is bringing this to the fore because that's something that is very leading edge, and there's no such thing as a blockchain of one. So you have to be engaging other financial institutions and suppliers and vendors in a given market to be able to do a trade finance chain or to do other types of products. But this idea that competing organizations, rivalrous organizations, the ones who are out for blood ordinarily when you're competing for customers, might actually have a common interest and be worth investing potentially millions of dollars in common IP. That is new, and it's not just the idealists, the ponytailed kind of hippies out here saying, let's do this. This is actually now the traditional solid banks, this is even central banks saying this is worth doing.
Very good. Hey, Michael, I have to again shift a little bit towards the business side of it, right? Because I think both sides have to proceed in parallel. So tech side we talked a little bit about, and looking at banking as a business, you traditionally break down in the business like sales, marketing, finance, operations, and the sales guy is just pushing for cards in the market. The marketing guy is figuring out the next media campaign. The product guy is defining the product. The financial guy is looking at the numbers. How does that evolve? I mean, that has to be also evolving, right, in terms of the various business models that you talked about. I think that's not often talked about. So can you throw some light around all the business models that you talked about which can take advantage or either be disrupted by this for the better? How does the organizational skills are to be invested in to take advantage of those models?
We touched a little bit about business models, but if we shift to how do you actually deliver the business model, we start getting into operating models. And a large portion of the operating model is your talent base. And what I think we can all agree on is there's absolutely a war or a shortage of talent. Right? And if we believe that, I think a lot of the smarter organizations have figured out that they don't necessarily employ internally the best and brightest capability. So you take a look out there, you have an entire petting zoo of fintechs and capabilities out there, and it goes back to being able to assemble the right talent. And you couple that with today's technology and access of the gig economy, you can get an extra cab anywhere you want. You can organize a hotel anywhere in the world. If you don't have enough data scientists in your organization, you can launch a contest on Kaggle. I could get someone randomly to sing happy birthday to me for $5 in the world. So the whole concept is you got to look beyond your own internal organizations for those skill sets that you're talking about. But I think internally, the tide's going to shift again. We talk about who you're going to call when something actually goes wrong in an open banking environment. I believe that these banks and organizations are going to start employing more cybersecurity individuals, data privacy, customer. And it's a completely different skill sets, even third-party risks when you're starting to deal with other partners and alliances in the ecosystem, which are going to be fundamentally different. I work very closely with the CIO, and one of the things he shared with me is the number one thing that keeps him up at night is some degree of cyber attack or data getting lost in the bank. So those skill sets, I would imagine, would be much more core, whereas you would augment those capability external to the bank if you don't house them yourself.
Thank you. So let me ask James a question based on his experience from Europe, right? Brian, you touched upon it a little bit, but let me ask this a little bit more of what could be done conscientiously to leverage some of the capabilities across banks, right? So in Singapore, there's this effort, or in Asia, this whole AFIN platform, right? They're talking about building banking as a service. And I think, again, full marks for Singapore to champion that. And I'm making the plug for Singapore as a Singaporean, right? So how about, is there a room for co-opetition as you are talking about, Brian? Like create a set of capabilities that will be, centrally provisioned so that banks can take advantage of it, fintech startups can take advantages. This whole open architecture gets built like in a more defined collaborative way with the help of some of the regulators and forums, industry forums. What's your view on that?
Well, I mean, firstly, I suppose a bit of a disclaimer. I'm kind of on the, I guess, informal steering group in relation to AFIN. So AFIN is an initiative by IFC, World Bank Group, MAS, as you mentioned, and then the Association of Banks in ASEAN to really pool resources, if you like. I'm sure I'm not doing a good job in explaining this already. People in the audience. It's really to pool resources amongst banks across the region such that FinTech firms will be able to offer a relatively standardized connectivity to banks across different markets in the region. So in effect, it's an industry sandbox is how it's being defined. So I believe there's an announcement in relation to it tomorrow, so I won't try and steal any thunder on that. But what I would say is, certainly our view is we'll see more regional type initiatives. By the way, these are not easy to do. I mean, it's to some degree, anything, as soon as you go cross-border, it adds a layer of complexity, which I'm sure we can speak to. But equally, I sit in Hong Kong. I think we're likely to see industry or regulatory sandboxes, cover what's known as the Greater Bay Area, so southern China, including Hong Kong, Macau, Shenzhen, and so on and so forth. So I think these types of regional initiatives wherein, we've already seen the beginnings of it with some of the FinTech bridges and MOUs that have been signed. MAS, I think, probably the most active globally in terms of signing these kind of information sharing bridges with other markets. But that's just the beginning. At some point, I think, for me, a big question here when we talk about open APIs in different markets is, what you don't want if you're a global bank or a global technology company is a series of different standards across markets. That suddenly, what was something that was meant to simplify partnerships and so on and so forth, actually adds another layer of complexity. So I think as we move towards more and more jurisdictions looking at their own standards pertaining to bank APIs, for example, I think it's likely that we'll see more international cooperation in that sense. And I should say, from our UK experience, my own view is the CMA, the Competition Markets Authority, the FCA, Financial Conduct Authority, who've been driving a lot of the initiatives in the UK, they are writing standards. They are writing API open banking standards right now, and they're publicly available. Go on the website, openbanking.org.uk, I believe. They are available, and it seems likely, and certainly we know for sure, that other jurisdictions regionally and elsewhere are looking at those standards, adopting it, maybe modifying certain aspects of it, but at a certain point, a bank API is a bank API. I think what I mean by that is we'll inevitably see more and more coordination and standardization across borders, and that can only be a good thing.
Good. So we have a few questions from the audience. So I just wanted to get the perspective of the panelists. So for the first question is coming as, what are some of the risk management principles to be considered for better open architecture? Why don't you ask?
I think you don't want to use bespoke interfaces or software. You want to use the things that other people are using, right? The items that others have hammered on, whether software, whether we're talking APIs. You want to know that people have actually interrogated it. You've done things like we do, like have a bug bounty for security holes, for example, right? You want to know that others have stood it up in production. That's one way to do risk mitigation on that. The second thing is, a lot of the focus in the emergent distributed ledger and blockchain technology space is on how do we use these tools to eliminate the risk of central parties or actors being attacked, being compromised, and corrupting the ledger, right? Corrupting what's been the history of transactions of what's been done. And that there's a tremendous amount of investment in cryptography and investment in security to do that. And I think it means that if you're adopting these technologies, you should have somebody on staff who understands the physics of these things, understands kind of what not only the different cryptography routines mean and proof of work versus proof of stake, these kinds of concepts, but can actually evaluate, candidate technologies and interrogate them.
So I think one of the things which was a related theme in this was that we embrace this architecture, right? But could there be some cataclysmic event that sort of triggers a rethink? That this fails, and could there be a few years down the line, you think you go back to a closed architecture? It's a very provocative question coming from the audience, but I'm just generally saying that what would be those type of things that could happen that would fundamentally, take the confidence away from the system and say, hey, we have tried this, it's not working out, let's go back to what we used to do. How do we safeguard against that?
Well, one sentence. I could imagine actually, whenever the whole audience and everybody's running to the left, you should think about the right, actually. So now, of course, this is a kind of mega trend, thinking about opening up and digitalization and so on and so forth. I could imagine that it would be quite interesting to create a banking model which is totally offline and really store it away, have air gaps in between, make it super secure. So yeah, it might be interesting.
I'm sure someone in Switzerland is doing that right now.
They have it.
That's called bars of gold. Is, I think,
I would have some names to this.
I mean, one super brief point on that. I mean, I do think at a macro trend level, we're in danger of the balkanization of the internet being an issue, and that then impacts cross-border. I mean, if we take as an underlying assumption everything is going digital and everything is kind of cross-border, which cryptocurrency, for example, would suggest, I think one potential counterforce might be increasing firewalls of varying degrees and at a nation state or jurisdictional level that could potentially impede some of that cross-border. But that's probably a conversation for another time.
There's one more question that has come up which I think is interesting, and I guess there's as these standards come up, right? I mean, and they were defined in openbanking.uk.org, right? Which are the bodies that are kind of defining it and keeping them current? Do you have a view, James, on like how do we sort of, set up a body that sort of is defining them and keeping them really, really, new and ongoing?
Well, actually, probably Brian is a better place to answer that. I mean, I know in terms of who's originating and who's, in the UK, it's a case of an implementation body has been set up with a limited shelf life, whose job it is to put this in motion to ensure standardization amongst the participant banks and to put it in motion. But then it's meant to fall away effectively, and regulation falls under the existing infrastructure. I mean, the MAS here have been very proactive in releasing and constructing indeed a kind of an API standard guidebook and so on and so forth. But I mean, I think maybe Brian would have a view on...
You can't really have a panel without standards without giving the old joke that the great thing about open standards is there's so many to choose from, right? And I think it is important. I mean, these standards compete in a marketplace of ideas like any other product does, right? And there are organizations out there that have, in the financial sector that for 30 years have been driving, financials, FPML, for example, right? I actually view it as a tripartite kind of thing. There's standards bodies who define kind of the interfaces that they hope people adopt. There are the implementers, whether that's the commercial providers, the vendors, or open source communities like the Linux Foundation and Hyperledger. And there's the governance organizations too, the ones that say, okay, as a community, as a network of banks, as whether it's Swift or whether it's ICANN, if we're talking the domain name system, right? There's a governance model that says, here's what we're going to use today, and on Jan 1st, here's what we're going to use then, right? And these three kinds of organizations for any technology adoption, all three need to exist and be empowered and be respected and be invested in. And so organizations of whatever size should consider, where do we kind of place our chips? Where do we want to make sure that we have a foothold in each of these three?
Okay. Hey, Michael, one last question before we wrap up, right? So one of the things is that open APIs, open standards are great, right? The customer data, right, which is being used in this, and it's kind of, it's a risk, right? How do you protect the customer data? And what's the downside? I mean, I'm not setting you up before we end this, but you have a view like, how do we sort of keep this whole trust in the system, there as we sort of share?
And you've got 1 minute to answer, Michael.
Can I pass on that? An interesting view of this is like who actually owns customer data. Is there going to be a time and place where the customer actually owns their own data? It's not housed at a bank or at Amazon or Google. You actually have your own personal customer cloud, and you decide who authenticates and is authorized to access your own data. Like the building blocks of that could potentially exist in the future. So you actually have your own personal cloud, and you allow, through digital identification, right,
Can I?
the difference between...
We're building this now. Yep, it's called Hyperledger
This is a
Indy,
setup,
and thank you.
But it's a personal cloud.
Yeah, well, it's there's a number of organizations. Hyperledger's one, the Decentralized ID Foundation, another called Sovereign. We're building the kind of building blocks for personal, what's called self-sovereign identity. where you'll have a wallet that looks kind of like a cryptocurrency wallet, but you'll have other kinds of digital assets, right? Your your fiat currencies, perhaps, your healthcare records, your other types of financial records, or even your shipping address. And you'll decide who to share that data with, and you'll get receipts for who you've shared that data with. So you can revoke access to it like the GDPR requires, right? And you'll know who it's been shared with. And this is essential. I mean, after 20 years of people working in the internet identity space to make something like this happen, the pieces are coming together finally.
Can I say though, the open question, and this is a great debate which we're about to run out of time on, but the open question here is whether your average consumer can deal with or wants to deal with the complexity involved in data ownership. And I genuinely think that's still a pretty open question.
And who do you call?
I'm sorry, we are running out of time, and so you've been a wonderful audience, lots of questions, lots of interesting questions. The panelists have been great. Some questions were answered, but as the topic is very complex, I'm sure they have left you a lot more questions than you came in with. So thank you very much for being here tonight, this afternoon, and thank you all. Pleasure.